Bismillahirrahmanirrahim. We are starting the today's session of Founders Edge program Cohort 2, Startup Financials for Dummies, by the respected expert trainer Ghulam Nabi Shah Saab. He is a CEO of Microsoft. He is also an entrepreneur, inventor, mentor, advisor, and technology executive. He has also a proven record and experience of more than 20 years in IT sector. He is also a founding member of Aspire Pakistan. With this introduction, I am leaving the floor to the respected Ghulam Nabi Shah Saab to present and to share his insights on this topic. Respected Jian Shah Saab, the floor is yours. Thank you.
Assalamu alaikum everyone. My name is Ghulam Nabi Shah. I'm one of the founding member of Inspire Pakistan. I've been started this journey together with all 26 folks. 2019, I believe, I think 2018 we started. Since then, we've been helping entrepreneurs like you to get to your feet where you can be success and do something great for not yourself, for the country as well. So today is my session. I will everyone welcome. I'm excited to kick off this today's session, the start of financial for dummies for essential guide. When you're launching a startup, financial knowledge can be overwhelming for you, but it doesn't have to be. I'm gonna shut off this so I have a good bandwidth. Being working as a founder or entrepreneur and CEO of your companies, you have to wear so many hats. You will be inventor, you will be managing people, you will be managing your expenses, financials. You're also gonna working with the partnerships, but it doesn't need to be you have to be a perfect in every single these categories. What you need to know is the basic of all of these traits that you can adopt to build your company and run your company successfully. And today's guide is designed to give you clarity and confidence as you can budget and track your expense or manage cash flow. So let's dive into this presentation. Let's start with the big question. Why do financial even matter, especially if you are just starting out? And I heard about the bad question. Survival is first. The harsh truth is that running out of cash is the number one reason a startup fail. You might have a great product, a strong team, even some good customer, but if you don't manage your money, the business won't survive. So a smart decision, financial data help you steer the ship. It tell you where to invest, where to cut costs, and when it might be time to scale. Without without it, you will making blind guesses, right? So having a good understanding and having a good knowledge about your finance, you can better success or you can anchor your ship to the right direction. So the basic is money in, money out, and profit and loss. Very simple thing that anything coming on the company, those money you're gonna spend for many different areas, and then you're gonna end up the day you're gonna have a profit and loss on your business. So when we look at all this, money in and out, we can say we have this is our GPS. You can say, you know. So to looking your financials or the health of the company, the business in a health, you're looking three different sheets or three different statements, you can say. They can help you to understand your current situation as well as how you can manage the future of this company. Plus, not only that, what you're looking from the investor in the future that you can show them the health of the company that give you money to invest and get more revenue. Can you mute yourself, please? Thank you. So first thing first, you're gonna look your income statement, which is your profit and loss. You can look at for the monthly basis, you can look quarterly basis, and you can look for yearly basis. The second statement you're gonna look is balance sheet, which is your financial snapshot of the health of the company, that how you are performing, you know, and that's something we're gonna discuss in a detail as well. The lastly is the cash flow statement, which is very important because that track actual money moving in and out. It's not about profit in on the paper. Company can be profitable, but they may not have a cash, for many reasons. So you have an account receivable, your some of the customer is not paying you, they're not giving you money, even though you have made the sales, you have showing the profitability that, oh, I made the sale, but I'm still waiting for money to come in. And that could be a red flag because if you don't have a money, you can't pay your own bills. So monitoring all these three statements is very crucial, and make a habit, to look at these things. When I am as a CEO of the company, I run multiple companies, I look these statement very often, especially cash flow. It's like every single week I look at how much money we have received, you know, and what's going on, how many bills I have to pay, and then I schedule it. This is what you have to do as well. You have to make your habit to look at all these. Can someone mute yourself, please? Because I'm hearing myself. Thank you. Okay. So if I look at the income statement, your profit and loss, we're going to look 5 different categories. Revenue, which is the money's coming in, any product that you're selling, that coming the money out, or services you're selling, this is what your revenue is. The COGS, the cost of goods sold or service sold. These are the direct costs involved in the making your product or material, or you manufacturing, or you selling a services. Then your gross profit, which is taking out your COGS out of your revenue, that become your gross profit. It's not a profit, it's a gross profit on the product that you have been selling, And then you have a OPEX, which is your operating expense. These are your day-to-day cost, like you're paying salaries, you're paying rent, you're spending money on marketing. You will hear soon, in the later stage, CapEx as well, which is your capital expense, which is money you spend, like major thing you're buying it. You're purchasing a building to do something manufacturing, or you're investing money to buy some machines to manufacture something, or you have a services that you're hiring a riders, and these riders need a motorbike, or you're investing, to bags and something. These are the things are come up from the capex as well. And then your income, net income, which is we're going to take a look in the next sheet. That I try to make this as simple as possible because I know some of the people just coming out of the technology background, some coming out from the different manufacturing background. Not everyone have learned the accounting. Maybe you have learned the basic accounting that you know how to debit and credit, but these are financial that you need to understand beside the debit and credit. So when you have a P&L looking at your profit and loss, right? But keep in mind, as a founding company, as a startup company, your P&L doesn't start until you hit the market. So you're building up the product, you're doing a lot of R&Ds, right? And you're investing a lot of monies on that project, product. These are all capital investment that doesn't hit your P&L until you go and start selling your products. So this is a very simple template example. So you can have a revenue of $110,000. The cost of the goods sold, which is your COGS, is $3,000. So your gross profit is COGS minus revenue in a simple thing, $7,000. But then you have an OPEX, which is you're paying salaries, you're paying the rent, marketing, and software. So your net profit is $2,800. As a startup company, you may be not profitable, right? You may not have the cash showing positive, but you still be profitable. And that's something I want to show you in the in the slide at the end of the presentation. Some of the terms you need to understand, that direct cost, indirect cost, fixed, variable, and direct cost, is like something you're making up, as I'd give you the example for rider, So the rider is going, he's using a gas, or you can say in Pakistan, petrol, they're purchasing, or backpack and something like that. This is your direct cost to your product. Indirect cost can be, you paying a rent, electricity that you are using, or manufacturing something, that this is your indirect cost. And if you're a technology company, you're having a subscription on some of the things that you are using, hosting your website or apps, those are your indirect cost. The variable cost, depending on the variable cost, like if you have a shipping item, you're shipping it, right? You're spending money. This is the variable cost. And then costs, as I mentioned before, that these are the material that you're using and labors that you are using. Those are direct, that the costs for your products. The critical for your entrepreneur to understand that when you start something, you want to keep your cash in your hand. You don't want to spend everything. You don't want to have too many people to do the things, and you're assuming that, okay, I'm going to get that many revenue, and I need 10 people to start delivering food, or start delivering, something. Or maybe you're having something else that you make, manufacturing of shoes, right? And you think that, oh, I can have these many things and I can just hire them. Try yourself to keep, your variable and direct cost, right? Maximize your cost, direct and variable, because direct cost to manufacture thing, buying a material and everything, but the variable cost is that something you can work with the partnership. You can, instead of making your own shipment, you can hire someone as a partner company. They can do the shipment for you. So as you get more and more business, you can utilize them, right? Instead of when you're not getting any business and you still incur so much expense that you have to pay salary if you have hired someone in house, rather than you can use the person, right, which you can reduce any point of time when you don't have a business, because they all hire hourly basis or per transaction basis. Secondly, you should know your unit economy of the product that you're building, because knowing your unit cost, you know that if I get the order, for example, 5,000 items I need to deliver, you can immediately work on your cash, that how much cash I have, what I have to borrow, as a loan, to build those products for my for next delivery. So this is a very crucial. You need to understand and try yourself to be as variable as possible, especially in the start mode, because you have no idea, you have no control right now on your business. You will get the grip of the control on your business, as you move on and grow your company. But in a startup mode, try yourself to start smaller, and manage it. The second thing is of your GPS is your balance sheet. Balance sheet tell you, it's a famous formula. There's nothing, asset equals to liability plus equity. This tell you what you own, what you owe to someone else, you know, and that something you have to know about it, because that directly impact of your account payable. The liabilities you have, the bills you have to pay, the loan payment you have to pay. You have to understand, and that's something you can easily understand. And I'm going to come back to this slide. I made this simple thing that your asset, and I'm sure you guys understand an asset. Asset can be anything that you have, like your machine is your asset. Your pattern, like if you have some good idea, that's your asset, right? Um, Asset is your knowledge. Your employees also. Employees also your assets, right? The good employee, that has a good talent that you are utilizing, because this is what you're going to sell and this is what you're going to tell to the investor, that I have a great team. They're all asset for you. So cash asset, that you invested the money, so you have a, and then you have account receivable, which is also your money that you're going to be receiving over time, or you're going to receive, certain time period. And the inventory that you have in your company that you're going to sell, down the road. So altogether, that your asset is become 8,500, right? And the equipment that you purchased maybe a year ago or recently. By the way, when you buy equipment, they also have a depreciation. Let's not to worry about depreciation right now. Let's worry about right now simple thing that you own this cost, you know, all the total cost is 15,500. If I look at all of the total, then your liability, how much you're paying, your payable account payable, which include rent and everything, short-term loan, if you have any loan that you have to pay, long-term loan, if you have to get any loan as an initial investment, so total liability. The golden rule of this sheet is you see that the total liability is 15,500 and your asset is 15,500. That has to match. If that is not matching, that can be many things. You may have a wrong data entry. You may have putting the information in a wrong category. So by looking this sheet, when you come in, your first thing you're gonna look, does my asset is matching up with my liability plus equity? You know, if it's matching up, is good. This is what you want to see in this report. Some of the keywords: the current asset, long-term asset, tangible asset, intangible asset, current liability, long-term liability, and shares holder equity. Current asset is a simple thing, anything you have in your bank account as a cash, or the money you're going to receive from your customer, or you have the inventory in your stock. They are direct asset, current asset for you. And the long-term asset is you use for over time. Things like company equipment or your property that you have purchased, these are your long-term assets. Tangible asset, physical, as I said, furniture, machinery you have. Intangible, non-physical, but have a value, right? I mentioned patent is your asset. It's intangible, but that's your asset, trademark that you have. Or you have a goodwill. They are intangible asset for you. So liabilities, they are different liabilities, that short-term liabilities, or you can say current liabilities that you have to pay, account payable, or you have a loan, that short-term that you have to pay. They all current liabilities. The long-term liabilities that you have a loan that you have to pay like 2 years, 3 years, and that's you have to have on your balance sheet, because that liability you need to show to your investor that I owe this money and I have to pay them out. Shareholder equity, that anything, liability minus asset, these are the shareholder equities, or your equities, if you are the only shareholder in the company, that this is what you owe in a company. Now, the last thing is the cash flow. The basic thing is in and out, cash, which is you can have an income, you're going to expanding those monies. So let's take a look cash flow. You have a cash flow, three activity you're going to do: operating activities, investing activities, and financing activities. So keep in mind, the profit is not your cash. You can have a lot of cash, but you may not be a profitable company. You may have a profitable company, or you may not have the cash as well, vice versa, because you have a lot of receivable, right? Which is show the profitability that you have sold so many products, but you're not getting money from your customer, that you don't have a lot of cash in bank. As a working last 20 plus years, managing multiple companies, based on my experience, the one thing you keep eye on your all the time, your cash. You can have all three reports, that you can have an income statement, balance sheet, but the cash, we say in America, is a cash is king. It is a king, because if you have the cash, you can do anything. The money is not in your bank account, is in the customer bank account or investor bank account. It's not yours yet. It's become yours because customer may not gonna pay you money, for many reasons. He can ask, okay, sorry, the business is not going well. I'm gonna pay you money in a installment, right? That can be happen, you know. So make sure that anything you have in a cash in your bank statement and or in bank, that's your money. That's the cash you're gonna be using it. Now, operating activities like day-to-day operation, cash from customers coming in, cash is spending on the expense, you're paying the payroll, you're buying supplies, that's all your operating activities. Investing activity that you have a lot of cash, right? You say, okay, fine, I need to grow. So let's buy some new machines. Let's buy some new services. That's your investing activity when you have a lot of cash in a bank. And financing activity is that money that you will maybe you need a money from investor. You need a loan, from the bank. That all your financing activity that you're going to be doing it. Okay. As I say in the beginning, if if you don't have the majority of startup is out of business because they don't have the cash. It doesn't mean they were not profitable. They may be profitable. And you're gonna hear from me this time to time because this is one thing you need to understand and put in your mind. It's like a hard wire, you know, in your brain. So it's a simple cash flow statement that you have a beginning cash, you have the cash from the customer that you receive, then you have a cash operating expense that you are paying it, and you're investing, $1,000. End of the day, you have the $5,000 cash bank account in your bank account. Not a rocket science, simple. I'm going to give you this presentation, see it, and you can learn it from other sheet as well. But this give you a very quick, idea that how the cash flow work in your company. Some of the thing I mentioned about the operating activity, right? Investment activity, financing activity, working capital, burn rate, runway, and liquidity. So these are the things you're gonna hear it as well when you're working as an entrepreneur, right? Your investor may gonna ask, what is your burn rate? How fast you are spending your cash, right? This is something to closely watch because they knows that if someone is spending a lot of money, their burn rate is very high compared to what he's gaining in the money that means the business is not going well. This guy doesn't know where to spend. Maybe you have a good story. You can say, I'm burning a lot right now because I know my forecast telling me that if I invest that much money right now, this is where I'm going to be getting the revenue, after 6 months or after 8 months. You need to have a good story for that. Now, runway, right? So I said I had a $5,000 left in my bank account, right? Now I have to pay bills for next month, 2 months. That $5,000, how long is going to be survive for me? That's a runway because this is a question they can ask. What is your runway is? Oh, I have $100,000 in my bank account. I can easily sustain my business for next 6 months. Now, liquidity, that's something your ability to quickly convert asset into cash. So, for example, you need money immediately, and you have an extra space in your building that you can sell it or you can rent it. You can convert that long-term investment into cash. That's the liquidity. Just need to know about these words in a keywords because that's something people are going to ask. You don't want to look in front of them that you doesn't know about it. As I said, keep track all the cash expense, because that's what you have. And also you will have a capital and operational. That's something we have discussed before. And all initial expense, are a capital investment because When you're not in a market, it's all capital, When you become in a market, then it's all become a P&L. Key financial metrics to watch. By the way, these watch by separate, everyone have their own philosophy. They watch their own way, right? This is what I'm recommending is the best. No, it's not the best. This is the way I run my business, right? Someone gonna run differently. They will have a different metrics to watch. But these are some of them very common. You're gonna find as an entrepreneur that people are gonna be asking, as I mentioned, the run rate, burn rate, you know, cost of acquiring one customer. Because if I say, okay, fine, I'm gonna have 60 new customer in next 6 months. So my cost is 50, right? I can say, okay, fine, I need $3,000 to have a 60 customer in my company, right? So you can immediately make this cost if you're aware of it right on time. And someone asks the question that, okay, fine, you're looking that much money and you're thinking that these many customers, you can calculate for yourself as well, but you can smartly can answer to the investor as well. And gross margin, productivity, this is what you have. This is what the another parameter investor look. Okay, how much your gross margin is? 70%. Wow, that's great, right? And then you're going to go to the P&L as well. But 70% is good. I put the rosy picture, so don't worry about because of the presentation. Uh, Reality is different than the presentation, but it's not going to be different because when I'm running up the business, some of the business we have a 40% margin, some of places we have a 30% margin, some of them only 10% margin. So it's depend how, and it's vary to customer as well, that the bigger customer may get a better deal because he placing a big order. If I'm working with Macy's, store in US, and he said, okay, I need a 10,000 shirt, right? Okay, so 30% margin in Pakistan. I heard the message on the top. So, which is fine as well. It's a great margin. 30% is not a bad margin. It's depend. If you have a 30% margin and your overhead cost is only 20%, you're still gonna make 10% profitability. So you need to look your expense as well. Again, how are you gonna find out this information? Your P&L, your income statement. Is income statement tell you that, okay, you have a 30% gross margin and these are your expense, what is the profitability coming up after that? So these are your GPS. This is what they're going to give you the true information that you can make informed decision. I put this small sheet. I hope everyone can read. If it's not, you're going to have the presentation anyway with you guys. These are the number. This is the formula sheet, and I can send it as well. You see the red, right? This is what your burning is. This is your burn time. That you're still making a sales. You're still making Izhar. Can you see it the number? Because I think it's very small. Azharullah, is anyone
Yes,
else
it's
can tell me?
readable.
Can you guys see it? Okay, you can see it. Okay, someone says yeah. Okay, perfect. Uh, All right, so this is the sheet I put together. It's a very standard. I have been used this many different time for my own. It's a simple sheet. We used to have a more complex, which has a more rows and columns in it. But end of the day, they look the similar, honestly speaking, right? When I'm presenting this thing to my investor as a startup, I can show them that, okay, these are my sales, these are my expense, right? This is my profitability is, and I'm still losing money as a cash. But I probably have a cash as a capital investment for $200,000, right? That I'm keep burning time to time until the second year of the first quarter. And right after first quarter, I'm start making money. And you see gradually the money going higher and higher and higher. But if I look at it, this is also another tips, um, as I said, you don't need to be a finance guru. You don't need to be a accountant guru. You need to have a basic understanding, right? You can hire a company who can do all the bookkeeping for you. And you can ask, listen, I need this information in a certain format. These are the three statements you need to send me out every 15 days or every week, or every month, depending how you want to see that. But I will recommend have a chart in it, graph in it. You see my mouse, right? This is the chart you need, because that tell you right away, okay, I'm still burning, when I start making money, that can tell me that, okay, now the new cash coming in a company. Always have those chart with you. Make the dashboard in an Excel that you can hire an intern person to go and enter all of your expenses. But you don't need to go look all the detail. You're gonna look all these, dashboard where you can see all the charts and you can make a quick decision, because you have so many things to do as a founder, you know, because you have to do work with the team to keep coming up the new idea, you know, you have to keep coming up with the um, managing the resource. You may have a problem with the team, is struggling, you may have a person leaving. You have to deal all these different things. And you don't want to have another headache that, okay, I have to go and take a look all the number crunching, that how the numbers going. You want to have someone to do it for you, but tell them you need to represent the information the way you understand better. And I recommend having a chart is give you very good glance of the whole dashboard, and you can make a decision very quickly. Initially it may take time for you to get adjust, or you can say is a time to understand, but over few weeks, I'm telling you, you become a guru for it. You're going to pick up the problem right away. Okay, here's the issue. What happened? Why my expense going higher? You know, you may have a credit card that someone is using for you, right? And placing a lot of order. You sales guy came to you, or maybe to the accountant, that, okay, I got an order to, 200 item to build, you know, or maybe I'm having a, the shoe company, let's go, the shoes companies came in. I have to build, 1,000 shoes. So I need to place an order for that many leather or something, right? Accountant says, fine, let's place the order. But now customer come to you and say, yeah, fine, we're still okay with your work order. We're still gonna have 1,000, but not now because market is not doing good. Can you do this like in next 2 months after? You're out of cash because you placed the order. But having the information every week to week, looking that information, right? You can understand very well. All right, so that's about this information. And then I put some in advice, don't don't start too complicated. Start simple. Maybe having an Excel sheet that I have, right? And that simple Excel sheet give you the information, but always have a graph in it, because that will give you the bit detailed information, because you don't want to go and looking all the numbers, right? Track everything, review regularly, ask help, you know, and that help is a good help. I've been running this company. I did my MBA and everything, right? I understand finance, very well. But still, I don't want to get involved in the finance because I have other thing to worry about. So having a help, having a temp, or having a partner company, a vendor who can come in and do the job for you is the better way to do it. Just ask what you need and get the knowledge, whatever, right? The way you want to look at the information. And always, again, always focus on a cash, because once the cash run out, you stop. It's like a gas in a motorcycle, gas in a car, right? When I say gas, is a petrol, by the way. The petrol in your car, right? When the petrol is out, you're not gonna move anywhere. You're stuck. You need a help. You need an investor to come in, give you more money so you can move on. So always eye on your cash. Now, what next? As I said, look at all these three things. Prepare yourself for your startup. as a sample. You can download so many sample available, and ChatGPT is the best, or Gemini in the best place to go and get this information, and they can teach you a lot more, but don't go into detail right now. My humble, advice. Don't get too crazy. What is the EBITDA? How the EBITDA calculated, which is your part of income statement? I actually take it out intentionally because that's not you need to know right now. You know, your your first thing is that you need to prepare simple thing and start following it. And then as your business grow, you're gonna have a CFO, you're gonna have a CEO, chief operating officer will help you. You know that they will help you out all this information. Now, I put some of the other things that, understanding company valuation, how I can evaluate my company. What is the worth of my company? This is a little bit complicated, but as a startup, as a founder, you should know about it. Okay. I'm seeing some pop-up message. That's why I stopped. Sorry. So what drive evaluation? Your market side, your opportunity, product and traction, right? Team strength. As I said, you probably have a very good team, very intelligent. That's your asset, right? That also help your evaluation that you can deliver the something, quickly. Comparable company in a benchmark to others, narrative or vision, what the vision you have. The sheet that I show you, right? This is what going to tell the people that how much my company worth in a 2 years or 3 years, and based on that worth, you're looking the money from the investors, right? Another advice: working as a founder, always keep 51% shares under your belt, always, because you want to have a decision making power. You don't want to your board or your investor making decision on your behalf, because once you lose the control, right, you're going to be depending on them. So always have your cap table, which is your stock calculation, right? How you're going to have a stock. As a founder, when you're starting up your company, you make a stock ownership of the company. So you make, for example, 1,000 stock in your company or 10,000 stock. Always have a bigger number, by the way. It's easy to distribute. They're having a lower number, which is, again, is perception how people manage. I found working with the larger number is easier and is bringing more, investors, and easy to manage everything. So you can, as a founder, you can have a 60%, and you can have an investor who can give you 15%, and you can have a pool of stock with a 15% for your team, right? Or the future partners that you can sell them, right? Always your cap table, keep certain in the beginning, keep certain percentage for the future partnership or future employee that you're going to give them. Because the good employee only you can able to retain by giving them some percentage in a company, because then they see the value. They see that, oh, if I engage with XYZ company and I spend my 3 years, I see the plan. I see my boss in a vision that in 3 years this company become $1 million company, right? And if I have a 5% of the $1 million company and I'm still drawing a salary, it's not a bad deal. It's a great deal, right? Because people can't accumulate money with the salaries. You're only going to make money by stock in a company. And I can tell you, there's a doctors in this, I don't know, professor, I think Azarullah mentioned, if they are finance and accounting. I know it's look a little bit offended, but I can tell you in schools, they tell you how to work in a system. They can tell you how you can add and plus money, but you don't know how to multiply money. This is the way you're going to multiply money. you know Doing the business, this is my dad used to say that when you're working better as a as an employee, you're going to play two sign, plus and minus. You're going to plus the money as a salary, you're going to minus the money when you pay your expenses. But when you're doing a business, you're still going to play with the two sign of the mathematics. One is multiplication, one is division. When you lost in a business, you're gonna big loss. Fine. That's something you have to control it, right? But when you make money, you make multiplication of the multiple of the money. That's the way you make money on it. So as a as a startup, as an entrepreneur, keep in mind this is the goal you have. This is you want to do. Your goal is not to, of course, your goal is to make a good product. I don't want to say that, right? And that good product will generate a good, help the people as well, right? That's another goal. At the same time, to run a business, you need to bring the food on the table for your family and your employee. So you need to think big. And the way you think big, this is the way you can think big. This is the way you make big money. Is that risky? Yes. But they have a good outcome? Of course. Is a beautiful outcome of it if you success. So understand all this, cap table, make the cap table day one. And another thing is keep everyone informed. Don't need to hide it. Because as your core team is informed, that's better suggestion they can give you. That's better they can support you. So keep everyone involved. Send out this information to your core team, not to everyone, because the core team can tell you that, okay, fine, we're having this issue. Let's cut this thing out. Or let's invest here. Or I have a great idea that if you have extra cash, let's invest here. You know, having that information shared among the core team will help you, you know, to grow the business or sustain the business. So this is about the cap table and the valuation. And I mentioned some formula. Your past money evaluation is, for example, $4 million investor owned 25%, meaning his worth is $1 million. You probably have heard in a Shark Tank, someone come and said, I'm looking $100,000 and I'm going to give you 10% of the shares, right? Of course, that means you have a $1 million valuation of your company. Simple math. This is the way they do, and this is the way they play. Okay, I'm going to give you that much cash, give me that percentage, and how you evaluating your company. So this is the way they do all the backward calculation as well. They just go to the calculator, put this information, and the calculator giving them a company valuation. Okay, you think this is what your cost is. Another point, keep in mind when you're selling your company, you know, in America, usually, if it's a service company, is go to the EBITDA, which is earning before your interest and everything, right? Um, they go sell by your multiple of EBITDA, right? And if it's a product company that you're selling it, right? Again, it's not a science, but this is the way certain investor buy the company based on the EBITDA. Certain company buy based on your revenue of the multiples. So, for example, your revenue is $100,000. They can say, okay, I'm going to give you 15% of the revenue, and this is what your company value is. If you have EBITDA and your EBITDA is saying that you're with $10,000, you say, okay, I'm going to get 15 to 20% of the EBITDA, which is higher, maybe 10% of the EBITDA, right? This is the way company going to buy. So giving this information to you is this stage is that you understand that how financial people speak about it, what the question they're going to ask and how you're going to react to it, rather than surprising when you're standing in front of them or presenting like I'm presenting and say, oh, sorry, I don't know about this thing. No, you know about it. All right. So you can smartly speak with them. So spending time on this, right? So I'm going to wrap up. Remember this, understanding financial is math. It's about the control, clarity, and the confidence that you're going to get out of it. Financial knowledge empower founder. It turns uncertainty to a smart and informed decision. And when you understand where your money is going, how long it will last, and what it's earning you, you are in a strong position to grow and success. End of the day, by the way, what you're doing it is increasing the your stockholder value and your value, because your stockholder who invested money in your company, they're looking you to shine, but not just shine yourself. They, oh, I have a bright application, a bright product. They want to see that how much money you also generating. So they are your soul, yourself, and they are the soul of your what I want to use are the receiver of the money, or receiver of the all the benefit of the company. So thank you very much. I'm gonna go to the Azarullah to the what is our next step is. But thanks for listening.
All right, sir. Thank you so much, sir, Ghulam Nabi Shasa, for your brief, concise, and to the point presentation. This was really a wonderful and informative session. With that, again, thank you for giving us a time far away from thousands of miles far from us. And again, we are thankful. Thank you so much. Allah Hafiz.
No, my pleasure. Thank you. Assalamu alaikum, everyone.